Hello, hello. Good morning, good morning, good morning, good
Hello.
afternoon. How's everyone doing? Hopefully okay. The market didn't kill ya. All right, so let's wait for a few more minutes and we'll get started. All right, anything interesting you guys found this week? What? Let me make sure. You guys can hear me? Let's make sure that all audio and all that stuff is going
Yeah,
fine.
so this is Helen. I'm new, so I don't know what I was supposed to find this week. So I'll just listen along until I catch up.
Sure, sure. Welcome, Helen. This is your first time you said you are new?
Yes, I'm new.
Yeah. Yeah, so we cover a variety of topics. Talk about market, talk about investing mindset. Then we also get together into breakout rooms and discuss anything that whoever else wants to discuss. So hopefully you'll find something that is useful to you. Uh, okay, anyone else who is joining here for the first time? Any other first timers here? No, I see Alfred, Derek. I don't know, maybe Derek, is this your first time or maybe I missed your name in previous meetings? Okay, he is. Okay. Dale, Lena, I think Jose, Nick, Pamela.
Hey, Vivek.
Hey, hey, Morris.
Hey, this is Morris. Real quick question for you.
Yeah.
I see a note under messaging that says uh, uh, there's a read.ai meeting notes to this meeting. Um, is that available to everybody? Is that just on my machine? I don't recall seeing this message before.
No, I think, and again, I sometimes get this request to enable meeting notes. Probably next time I won't do it, but this one I
Somebody
did.
has it. Somebody has it turned on their
Somebody
side.
had it
I think
turned
it
on.
says Saria.
Yeah, but I don't know if
Korea.
it's
Okay.
probably available only to Syria.
Oh, okay. Okay. Yeah, I wasn't sure if it was something central that you were doing or an
Oh no,
individual.
no. So I think I have it turned on. Again, I have to figure this out.
Okay.
All right, but
Sorry to
anyway, the
interrupt.
recording will be up on the website. So as always.
Perfect.
Okay. All right. Anyone else here? I heard Jose's regular ones. Anyone else here for the first time? Sawyer. Hey, Sawyer. Welcome. How did you find us, and what brings you here? What are you looking to get out of this meeting?
I found you on Meetup. You just popped up. I'm not sure why. I guess because of interest that I selected. And
Okay.
I'm just hoping to get some a little bit of education on options, possibly crypto. I'm already a pretty avid stock investor, but I don't do options. I
Oh, okay.
just
Okay.
I just
During the breakout sessions, options and future is one of the most popular sessions. A lot of folks are interested in options. Sean Foon says no sound. I maybe Sean something at his end. Maybe check your speakers. What else? See, Resh, Michigan crowd is here. Anyone? Pooja. Pooja, is this your first time?
Yes.
So what brings you here? Where are you joining from, and what are you looking to get out of this meeting?
I'm joining from California. Just I do investing a little bit.
Oh,
So, just wanted to try and learn as much as I can.
cool.
Yeah. Thank you.
Good. Welcome. Yeah, I'm in Bay Area. I don't know where in California you are, but I'm from Bay Area.
Oh, I'm in Bay Area too.
See, world is small.
yeah, me too. I'm in Los Altos.
Oh, you're in Los Altos. Okay,
Nice.
cool. Maybe we should do one Bay Area gathering. I know folks have been asking for it, but we'll probably at some point of a time we'll do in person.
Vivek. I'm also in Bay Area, Mountain View.
Okay, hey, cool. Good to know that, Pranav.
We should do a holiday
Vivek.
get together.
Sorry?
a holiday get together. We're about to get to the holidays
Yeah,
in the
maybe
Bay
we can do
Area.
that. Yeah.
Vivek, Bay Area is not small because of lousy municipal transportation.
It's okay. I think we've learned to live with that. Naresh
Well,
is in your.
I haven't. I take it. I rely on it. It's. I mean, compared to China, what you call it, municipal transportation, it really is bad.
Oh yeah. Public transportation in overall US is not great anyway. Naresh is saying you're popular in Michigan. We should do first in Michigan. Maybe if I visit Michigan, we will definitely do there. All right. So I think we got enough of a quorum to get started. So, what I want to talk about today, and again, for those who are joining for the first time, I do have some topics that I bring up for discussion. We talk on that about for almost 2 hours, 2 to 2.5 hours. Then we break out into different breakout rooms, and we want to talk about alternative investments, crypto, or we want to talk about details of options and futures, technical analysis, or just fundamentals. I discuss that in the breakout rooms. But during the regular session, if you have a questions, feel free to ask. Put it in the chat. I do monitor chat, or raise your hand. Come forward and ask your question. For today, I want to look at. Let's start for today's session. Let me see if there any other message. No. Cool. All right. So welcome everyone to our discussion number 299 for our Saturday investing dojo, where we come and train our mind, train our I would say our education, get a little more educated on investing. I learn from you, you learn from me, and that's how we basically all become better as an investor. So these discussions are generally focused on DIY, investors. So if you are a financial advisor or run your own prop firm, or if you are institutional investors, may not find the content that great, but that's okay. I'm a DIY investor and I want to just make sure, I share what I do and learn from your experiences as well. So this being an earnings season, this week I'll go through a lot of earnings. Uber, Arista Network, Shopify. Now these are the stocks. The reason why I picked up these because I own these in my portfolio. So plus I have a bunch of other stocks which are more popular stocks among retail investors like Hood, AMD, Lyft, etc. We'll go through that as well. Depends on how much time do we have. I'll start general, also look at macro, what happened this week in terms of a macro, any news, etc. Then any company specific news, what's happening on the crypto market. These are generally the topics that I cover. And if you have anything additional, let's talk about it. Jose is asking, would be good to go over signals to look at, determine whether we are merely experiencing a pullback or this is the end of the world recession. If it is end of the world, the last thing you'll worry about is your portfolio, right? So, and if it is not the end of the world,
every time we have a red day, I hear people saying we're in a bear market. It's kind of hard to explain. You know what I mean?
Yeah. So, I mean, we talk about it's a bear market and all this stuff, but we are not even 5% drawdown. Come on. If you are investing, 10% drawdown is common in any year. We are not even 5% down from our all-time high. So I think if you are feeling little jittery about what's happening in the market and whatnot, maybe you need to look into your portfolio and see what are you holding in your portfolio that is causing you a little concern, right? I'll just fire up my think or swim, and if I just pick up SPY, right, we are looking at, let me just go to 1 year, right, 2.72% because we had some recovery on the Friday end of the day. Come on. We're only not even down 3%. So what are we talking about? I mean, if you look into the media, probably they'll make you feel if it is the end of the world, markets in turmoil and whatnot, those headlines. But we're not even 3% down. And we are what? What did we lose? We are back where we were on 23rd of October. We only lost what, 2 weeks, right? But log on to Twitter or what now we call it as a X or Facebook or Bloomberg or CNBC. Will make you feel as if it is we are entering recession and markets are just broken, right? So Jose, from my perspective, I don't worry. I think we just need to look at our portfolio and see what are we holding, because there are companies, and I'll go through some of those, which probably have corrected 20%, 30%, right? The question is, if you are getting shaken out, and was it not specific to you, but as an investor, if you are getting shaken out by this 5% drawdown, maybe look at those high beta companies. They probably ran up too much too soon, and now they're just correcting it, right? So, but I also saw in of my friends group chat around, is this bloodbath? I'm like, come on, we are only 5% down. Life is okay. And generally, when it comes to the investing, my thought process is, if the world is gonna come to an end, then the portfolio doesn't matter anyway. We have a bigger problems to worry about. And if the world is not gonna come to an end, and market is assumed that's gonna come to an end, it's a good time to invest, because the market will correct itself. So I will stay invested. I did use these minor corrections to add some of the stuff in my portfolio. I will talk about it. But yeah, this is why you should keep cash on the sideline to take advantage when the opportunities present themselves, right? If you don't have a cash on the sideline, or if you're leveraged, or if you're leveraged, then these opportunities become a nightmare for you, because people start getting margin calls. But if you have a diversified portfolio, and if you have cash on the sidelines, these corrections become an opportunity for you. So it all depends on how you are structured your portfolio. It could be an opportunity, or it could be a nightmare. It depends on what you hold in your portfolio, and how basically how you have structured your investments. So for some, it could have been opportunity because the market is down 5%. I generally try to deploy capital in phases. If market is down 5 to 10%, I'll deploy 20% of the capital, which is keeping on the sideline. Goes on another 5%, I'll probably deploy a few more, a little bit more capital. Right. So that's my thought. Pooja said, love the perspective, world coming to an end. I'm a, what do you say, right? You save like a pessimist and invest like an optimist, right? You should save from your salary, or whatever the way from whichever way you earn. Either you're running a business, or you're on a salary, or you're doing 1099 job. Save like a pessimist, as if that tomorrow you're not going to have that job, or a business is going to come to an end. But invest like an optimist, saying, hey, human ingenuity, you can't question it. We have gone through many wars, many diseases. We have gone through, latest one is the COVID. We will survive. And we will survive. The markets will, long-term markets will do good. That's how I invest. Otherwise, it is almost impossible to invest in the market. Can you talk about how government shutdown influences USA economy? So far, I don't know. We don't even have our government numbers out, so we don't know how much the number hasn't impacted. But except the labor market, haven't seen much of fracturing
Vivek,
in the economy, right? So
I asked you because you lived through 2019.
sorry.
You lived through the last longest shutdown, and that was
Yeah. So
2009.
nothing matter, right? So I just hate this drama every year of this shutdown. We should get rid of this whole debt ceiling stuff, and because at the end of the day, this is what happens. We are continuously raising our debt ceiling. Now we are sitting at $38 trillion of debt. then what's the point of having a credit card limit if you're not going to stick to a particular limit and every time we raise the limit? But I think this has become a point of political parties to get through their own agenda, and hence every year we still go through this drama. I'm like tired of this one. But yeah, there are short-term, you will see consequences of it. For example, the airlines, etc. If you own airline stocks, which I don't know why you should own, because airlines over collectively is a very bad investment. Great for economy. We need airlines, but collectively as a business, as an investment, not as a business, but as an investment, the airline sector has never returned much money for their investors. So, but this week, specifically because of the shortage of all the air traffic controllers, etc., airlines have been asked to cut down and reduce the flights. So now they've been canceling a lot of flights, and the stocks have been also punished. So, of course, there is a labor market. We saw some numbers around that the labor market is not looking that good. Of course, because a lot of federal employees have been furloughed, and also companies are not hiring at the pace which they used to. Yeah, a lot of companies are using better technology to do the work of more humans. So positive side, if you're an investor, is if the labor market we see continuously, if we see the cracks in the labor market, then we might get a little more rate cuts sooner and maybe of bigger magnitude, and that will bring in liquidity in the market, and market loves that. So I think it's a high time that apart from being an employee, you should also buy the shares of the company that you're working. I mean, of course, if you're getting your 401, if you're getting your ESOP or ESPP, you need to look at the concentration. But one thing which I've seen on the market is every time there's an announcement of a company's cutting down their employees, the stock rises. So as an employee, you get impacted. But if you hold the stocks of the company, if you are a shareholder, it's good for you. So you may want to look at how to take advantage of these situations which are not good for employees. Can you speak on the possible AI infrastructure overbuild? So we did talk about it. Was it the last week? Where I have gone through, I think, Kotu's report plus Financial Times plus a few other resources to talk about is AI is AI a bubble or not. So you may want to refer to the last week's video. It's available on my website. I've covered this topic, but today I think I'm going to talk only a little bit about the concern that I'm seeing, that the concern that I have based on whatever happened in last two weeks around the way these infrastructure build is being funded. So yeah, I will talk about that. Pranav said, does that mean airline stock should see rise once government opens? I have no idea. We don't know. I don't know what the stock's gonna do next week or next month. And I don't track airline sector, but right now airline sector has been impacted because of all the shutdown. Now, whether it will go up or not, how much gets priced in, when it will go, it's almost impossible to tell you. So I don't trade based on these short-term news. I know at a high level, at a longer term, airlines haven't been a great investment. So I'm like, okay, I'll stay away. And I have no need to try to time these ins and outs based on what the government is doing. Right? I might make money in one fine trade, but that probably would just be luck. All right. So before we get started, as always, anything that we discuss here is for education. Don't take it as a financial, tax, or investment advice. So with that disclaimer out, let's look at the markets first. All right, so S&P 500 tech sector was challenged, whereas we did see some other sectors that over the week have done better. Right, you look at financial, especially Berkshire Hathaway. So Berkshire Hathaway is, I would say, is an anti-tech and it's a low beta trade. Whenever you see the markets, the participants or the investors getting little concerned about either the froth in the market or they want to go to the safer places, you will see Berkshire Hathaway or other dividend paying companies performing better. Right? We saw consumer staples, at least the Walmart, Costco, have done better for this week, even though the staples has done nothing for this year. I think probably this was the only sector we looked at last week. This was the only sector that have been down for the year. All other sectors of all 11 S&P sectors have been up positive for the year, except staples. We'll see where staples goes. But utilities, real estate, they all have done okay. Tesla had a big drawdown. I don't know. Even we had a good news on Tesla, but again, it's at the end of the day, it's all about valuation and how the investors feel in a short term. So all the AI related trades, all the Max 7 related companies, we saw weakness in all of them, right? So I'm not surprised. Microsoft is down 4%. Nvidia, even the leather jacket godfather Jensen couldn't save Nvidia. Nvidia is down almost 7%. Broadcom down 5.5%, AMD down 8%, Oracle is down 8%, and the retail favorite Palantir is down 11% for the week, right? And if I am not wrong, Oracle gave up all the gains that it have had after the previous earnings. Remember, they gave like $490 billion worth of backlog, and the market was like, wow. It was completely shocked the market. Stock went up 35%. Now it's back to where it was there pre-earnings. So if you thought you missed the train on Oracle, you have a now new train on the platform. Train always comes back. I mean, unless there's a big change in the business, which I didn't see on the Oracle side. But now it was a lot of enthusiasm on the backlog, which I think I did tweet about it. Nothing is confirmed on that. These are not the contracted revenue yet. These are not the remaining performance obligations. But market was, got carried away by the huge number that Oracle had posted. Now we gave up all those gains. So the train is back on station. If you want to hop on Oracle train, there we go. We had a lot of other trains that came back to station. Look, Palantir, PLTR. It's back to where it was around mid of October. Right? Me personally feel it should need a lot more correction because it is still highly valued. Superly, egregiously overvalued. But doesn't matter. People want to bid this up, they will bid this up. But we did see some corrections in this. So I'll share some tables of different groups of companies and what happened over the last week. So out of Max 7, barely Amazon is barely positive. Nvidia had lost the most for just 1 week. Year to date, everything is still green. We don't have to worry about it, right? I mean, year to date, SPY is still up. How much? Almost 15%. Right? So don't tell me saying, oh, the markets are in that. Come on, man, 15%? How much else do we need? Right? Tone down your expectations. On an average, starting from 1920 to 1920s till now, the average return has been around 10%. It's a different, but if you look at every year returns, I don't think S&P has delivered 10. Most of the time it has been way far away from 10%, but the average is 10%. So if you're getting like 15%, I think I'm pretty happy. I'm not concerned what's happening this week. Right? The meetings, the market is still good. And now we generally our Q4 or December, we get Santa Claus rally. I'm not sure whether we're gonna get that this time or not, but seasonally Q4 is good for markets. So if we get another a couple of percent points gain, that'll be pretty good, right? I have absolutely no complaints about the market. I think these pullbacks are healthy. For if we are really long-term investor, I wish we get some of these more pullbacks so that we can get on board some of the trains that we thought we have missed, right? Because I don't care where, let's say, some of these stock go in 1 year or in next 6 months. But if we get some healthy pullback, yeah, I'll be willing to load up on some of the stocks. But it's not easy thing to do. You have to kind of decide it in advance that this is what you're gonna do, or maybe have your order, good till closure order ready, because when the time will come, we will freeze. We'll freeze. Our brains will stop working. We'll feel numb and not be able to buy. Unless you have done your analysis and you have already decided, I think this is the price point at which I want to buy. Otherwise, we will get carried away by what's happening in the market. You'll have to put your own rules or when you want to buy. Do you feel that any of the Max 7 pullback can be attributed to institutional investors taking profits? Maybe, because these stocks have done really well. And if you see a little bit crack in the market and you want to, realize the gains, because now we are sitting in a Q4, a lot of institutional managers, fund managers would want to, clean up or window dress their portfolio, not window dress. They'll actually want to make sure that they can show to their investor that they have they have a gains to show at the end of a year, and they might have sold some of these to make sure that they don't lose more if the correction continues. Or who knows? Who cares? Right? It could be. I mean, even despite that, we are still nicely up on many of these stocks. But if they did, and if that gives an opportunity, let's take advantage of that opportunity. Because we are not, you and I, we are DIY investors. We are not bound by end of a year performance, right? You're not answerable to any other investors. I'm not answerable to anyone else to see how did I do by the end of this year. Even though I track it, that's just for me to make sure I'm doing what I wanted to do, but I'm not answerable to anyone. So I necessarily don't have to sell my winners just to make sure that my end of year brokerage statement shows up how much percent gain of profits I've taken, right? I don't have to do that. So the question is AI game over? We will look at it. I don't think AI's game is over, even though there are some signs that's little concerning. We will talk about that, but we are still early in this AI game. That doesn't mean that every player in this will be successful, right? We have a life-changing technologies, but there are many companies playing in the same technologies that have gone bankrupt, right? Talk about dot-coms. I mean, it's a cliche talking about .com and what happened during .com and how internet has changed the way we do business, the way we communicate, the way we talk to each other. But were companies not gone bankrupt during .com? There's a lot of companies that just went bankrupt. And this will always happen. So be ready with it. Be ready for it, I would say, right? That the market will correct. There will be companies who probably are valued in billions of dollars will go to zero. But then there will be companies that will emerge to be the winners of the next technological revolution, right? So don't be surprised when that happens. Just be ready to ride that game. What we also saw was digital asset treasuries, right? Look at the correction that happened in the SMLR, MicroStrategy, SBET, which is Bitcoin, BMNR, Tom Lee, right? It's down like 36% in a month. And I know when this Tom Lee came, he comes on CNBC and talks about PMNR and how Ethereum gonna be the the next life-changing or game-changing technology for financial institutions. I mean, I do believe on Ethereum and some of these projects and the opportunities for it. But does that mean I'm going to invest in BMNR? Probably not, right? So, but that doesn't. When Tom Lee talks, a lot of folks listen, and this got bid up to what 161, right? And so it's back to 33. I don't know. Do anyone remember when was Tom Lee appointed the chairman of BMNR? Could have been probably July, because that's where I see a lot of this. It just went parabolic, right? So they gave and now I see similar digital asset treasury companies basically appointing some Wall Street prominent figures as their chairperson, because it gives them the credibility. And uninformed investors will just bid up the prices of the stock prices without knowing what these treasury firms even do. Right? So anyway, so if you were on BMNR, my sympathy is with you. There are many other ways to get exposure. Hopefully BMNR will try to do some financial engineering like MicroStrategy has been trying to do, to give you some more returns than what the underlying asset can give you. But even MicroStrategy over the last 1 year has done nothing. Right? Over year to date, it's down 16%. Whereas, I don't know, Bitcoin is, let me look at IBIT. IBIT has been up 6%. So I assuming Bitcoin has been up 6% because they closely track it. And MicroStrategy has been down 16%. So I don't know what alpha has MicroStrategy been able to generate this year. They do have their own BTC yield. By the way, if you logged into the MicroStrategy conference call, it was like he presented maybe 90 slides of it, all financial jargon. You'll need to have a huge patience to go through that. So invest.
I mean,
Only in the things that you understand. Sorry, what was it?
the thing about these companies is that you're right, like they're not, as a standalone company, they're not valuable. They're really just a leverage play on the Bitcoin with MicroStrategy and Ethereum with whatever it is.
BMNR
like
has backed
SBET.
and all that. Yeah.
So it's like you can't look at it as like, oh, this is like an investment long term. It's more of like, can I time it to when the price of Bitcoin goes up a lot? Then this, you know what I mean? Like it's like buying options. It's like buying options on Bitcoin. So if you don't time it properly, then you're going to get screwed. But it's a levered play.
Yeah, I haven't even looked for, even if it is a levered play, maybe then the correlation should be at least high. I've not looked at in terms of what's the correlation of the pricing of MSTR and Bitcoin. That doesn't seem to be correlated. I don't know, maybe it is correlated for a particular duration, maybe 1 week or 1 month. But
the thing is, like, the reason why it's not working is because Bitcoin has been tamed. Like, it's not very volatile anymore, right? It's the highs. Like, it only works when Bitcoin goes parabolic. Like, if you look at last year, that's when MicroStrategy stock went up a lot, and then it crashed because Bitcoin stock price went up a lot, right, in a short period of time. But if it's dragged out over 6 months or a year, then like because what happens is people that had Bitcoin, when it goes up a lot, they'll rotate the money into MicroStrategy or something like that.
So then with the institutional involvement in this asset, the volatility will come down.
Exactly.
Over the last few years, the vol on the Bitcoin has been coming down, and it will continue to come down because some of those who have invested in, let's say, these ETFs, so those boomers, they don't sell if the thing is down 10%, 15%. They'll just continue to hold it.
Yeah, so that's bad for MicroStrategy because MicroStrategy only benefits from the rotation when it goes parabolic.
I'm only concerned about this event. There is another event that is coming up, is BIP 444. I'll talk about it today. But other, what do you call, an event which I'm concerned about in this ecosystem is what MicroStrategy, if it starts to unfold and has to start selling It's Bitcoin.
I don't think they will, because I thought that in 2023, and the way that they structured the debt, they
so
were
as
fine.
long as he can raise the debt, now he's going over to the EU, Europe, to raise the debt. Maybe not been able to raise it. I don't know, but I do know that one of the another like digital asset treasury company, they basically sold off. I think it's Ethereum based. So they sold off Ethereum because the stock was trading at less than one MNAV. So they sold off Ethereum and bought back their shares, which as a CFO you should do, right? But if you're looking at an Ethereum ecosystem, hey, as a treasury company, you're never supposed to sell these because your whole valuation is based on the Ethereum that you hold. But this area is so new, so for others who are new to this, I would say spend enough time to educate yourself around how these companies plan to generate alpha, and if it doesn't make sense to you, maybe stay away from it. Do not invest in anything that you cannot explain in 5 minutes to yourself in terms of what their business model is. Some of these business models have been convoluted and are opaque for a reason. Right? So there are ways to not directly invest via ETFs if you want to get an economic exposure to, let's say, Bitcoin or Ethereum or now Solana. I added a new position. We'll talk about it. So there are, if you want to get an economic exposure to these asset classes, just directly buy these asset classes. Don't then overlay these companies and then you're dependent on how these companies perform and whether their strategy that they're trying to do actually works or not. Pun on you strategy, because hey, if you had just held Bitcoin, you're up 7%. Now you have a delta of almost 23%. So understand, these business models are not easy to understand. These are very new, and I think when Wall Street is trying to figure out what the heck these companies are doing. All right, coming to the next one, nuclear energy, right? Which have been like, oh, the retail favorite, as if and all these companies were better because we need tons of energy for running AI data centers. The moment we saw a little bit crack on the AI story in the media, in the minds of investor, a lot of these nuclear stocks have had huge corrections, right? They're still have done well for 1 year. If you look at over 1 year or year to date, but remember these are very volatile stocks, right? Higher beta stocks. Many of these companies are probably just a project on paper, no product, no nuclear power plants created, just a science project. The question is, do you want to invest in the science project, or do you want the company to maybe become a little mature before you want to invest in? That's the decision you have to make. There's nothing wrong in investing in this, but investing in a company which is very early in its life cycle, but then treat it like a venture investment, right? Treat it as a put in your portfolio, which is dedicated portion of a portfolio which is dedicated to venture funding, right? And you're never going to put 100% in your venture funding unless you are a professional VC. In that case, it's not your money, you have LP's money, right? Even VC doesn't put all his own portfolio into the venture because the success rate is very low, right? It's most of the companies will go, they won't survive, and 2% of the companies return provide all the returns on the VC industry, right? So I've not invested in any of these, but I'm not saying these are not uninvestable. Position sizing is more important when you're investing in a high beta, new tech, these companies.
Well, I think also like it's actually kind of similar to the Bitcoin stuff. Like the uranium companies are dependent on the price of uranium. So when the price of uranium goes up, those uranium companies goes up. And then if you look at the cycle of where uranium is, it dropped a lot. And it's also kind of coincides with gold. So like a commodity cycle, they have cycles, and the companies tied to them, they react to the main asset.
So CCJ is, I think, Canadian-based uranium miner. if you want to look at uranium, then I think is an ETF, or no, this is again a uranium company. Yeah, they had a huge run up. Now they are correcting it. Regarding gold, today morning I haven't finished watching it, but probably if you want to watch it, Professor Ashwatthanamohan has released a new video talking about gold and pricing and going back to the historical correlation. And I think probably at the end he'll give his own thoughts on is gold overpriced or not. So if you want to watch it, it's on YouTube. All right, which one is this? So this is nuclear energy. A lot of retail favorite stocks. Celsius, CoreWeave. I guess this is Tempus AI, Circle, Rocket Lab, Open Door. I think doors were shut down on Open Door. Nebius, Oklo, again is a nuclear energy. I think Astera Lab, Palantir. Yeah, so all of them ended up in red. I think so. Only iron probably on the last day it corrected, but yeah, the influencers on YouTube didn't have a great week because they all generally talk about all these stocks, very volatile stocks, and have done well. I will give it to them. Have done well. I think out of these, I had only one in my portfolio. I've been pretty happy with it, but oh, Tesla is also there.
Question.
BlackBerry. So yeah, go ahead, Sam.
There was an article today that because you were a voter, so they said this is a last ditch effort for Tesla. And, the article I put it in the chat. So why did you vote for Musk getting 1 trillion?
I'm not sure what you're asking for.
There's
Musk. Oh, Musk. Oh, yeah. I will vote. I'll talk about it. So let's. Yeah. So I'll talk about it. Why did I vote yes for Musk?
Yeah, because the article says it's the last ditch effort for Tesla. And,
so Tesla is again. You know my thoughts on Tesla, right? So it's it runs on the charisma of Musk. Otherwise, they will not have the valuation that it has, right? But he has delivered. I'm not going to bet against him, but I'm not going to make Tesla. I've not made Tesla the big portion of my portfolio, right? Because I understand the risks that it is going through. But for those who've been in early Tesla investors, hey, Musk has delivered for them. But we'll talk about it. Hold on. Then I looked at other country ETFs, right? And there are a lot of countries that have done much better, not than US, at least this year. Generally, you will see US market is one of the best ones, but for this year, we see a lot of emerging markets have done better. European markets have done better. So look at year to date. What was EWY? I forgot. Taiwan is up 25%. Let me pick another one. EWP is, I think, Poland is up 62%, Italy 45%. So a lot of other markets outside of US have done better. So if we want to get some diversify your portfolio to have a geographical diversification, which I think we should do it. Because, I mean, US have had a great run over the last, I would say, 15, 20 years. Anyway, and a lot of investors, including me, have had some exposure to outside of US, but these haven't done well over past, I would say, a decade. But this year, it's done pretty well, right? So here's a list of tickers. I had to find out these tickers because I'm invested only in few of them, not all of them. But if you want to get exposure to outside of US, now there is a way to do it. You have these ETFs available, right? Or there are companies that have derived their revenues from these areas, or you can invest in those companies because they have their ADRs that trade on US exchanges. I do own some of those companies in my portfolio, but if you just don't want to bother about studying a specific company, want to get a country exposure for whatever reason you think that country is going to do good, there are a lot of ETFs available. Right? Sector performance, like I was saying, oh no, consumer staples actually turned positive for this week. Because this week, I think the staple sector, as we saw, Walmart and Costco were positive. So eventually turned positive for this year. But again, this has been the worst performing sector so far. But it had done great last year. I don't know why it did so great last year. The Costco was like trading at 50 times their earnings, that to forward earnings, and I just couldn't wrap my head around it. Eventually, it's a subscription and a retailing business, but it is what it is. The shares got bid up. If you look at 2020, let's go back to 5 year. Right? Look at this great run from 2023 and then 2024. Right? From $400 in 2023, in 2 years it closed almost double, more than double, for a company it's a retail company. So and now it's gone almost nowhere. It's year to date, it's just sitting at 1%. So not surprising that the consumer staple sector has not performed so far this year. So if you're looking for some sectors that have not caught up, maybe it will catch up, then you start looking on from the bottom of the table, right? Consumer staples, real estate, materials, energy, discretionary, etc. And the best performing sectors so far are still the information tech and communication services and utilities, because it is a lot of demand for power to run AI data centers. Right. So that's on a quick look at the markets. And let me go through. Let's talk about this book. So I do want to. I'm a big fan of invest mindset and having temperament or behavioral aspects of investing, because if that is not correct, then doesn't matter how great the stocks you have picked, will never be able to enjoy the fruits. So always have to train our own behavior, train our own mental makeup to become better and better investors. So I do want to spend some time around the mindset related stuff. So I think no, 2 weeks ago I mentioned that I'm currently reading 2 books. So actually I was able to finish this one, Rule Breaker Investing, from David Gardner, who is a co-founder, and I don't think he's a CEO anymore. Maybe he is, of Motley Fool, which is basically a subscription service that gives stock recommendations, right? So the way, I'll give you a quick summary of this, and then if you find it useful, maybe you should then go and read the full book. It's a good book to read, right? And David Gardner, his claim to fame is he probably has the second lowest cost basis of Amazon share in his portfolio, just after Jeff Bezos. His cost basis is 16 cents, right? So he bet on Amazon like right after it came IPO, and has held its shares since then. Never sold, which is a very difficult thing to do, right? The Amazon share was down 90% at some point of a time. And similarly, I think his some other big winners are Netflix, Mercado Libre, so the Booking Holding. So these companies have become like 1,000 times, right? All right. So the book is divided into 666, basically 6 habits if you want to become a rule breaker investor, 6 traits of how do you find rule breaker companies, and 6 principles around how do you manage your portfolio, what principles you should use. All right. So 6 habits of a rule breaker investor. Number 1, let your winners run high. And this, I'm also guilty of not following this, because hey, Like we just talked about it. When you want to sell, you will sell some things which have already gained in value, right? You get a dopamine hit. That win, gives us a dopamine hit, and we want to make sure, that we back the win and then we move forward. So if we want to feel good, we will sell what has performed, right? But what from a David Carter perspective, you should let your winners run high, never cut your flowers, right? And unfortunately, most of us will cut the flowers to water the weeds. Weeds basically are stocks that have not performed, right? We try to double down, which brings us to the second habit: add up, don't double down. Now, these things are not easy to follow because instinctively, you will feel that it's like, what a crap. Why should I add up and increase my cost basis? If I'm getting a new capital, I should invest and make sure that I reduce my cost basis and buy the shares when they are down. But the logic behind this is the winners keep winning, right? So if you want to add to the winners that keep winning and that keep going up. Third, invest for at least 3 years. I would say make it 5 years. I think this doesn't need an explanation. Fourth is follow the four tenets of conscious capitalism. Look for the companies that engage in purpose over profits, because you need something beyond money making as a motive for a company to become a great company. Anyone can be mediocre company. CEO can run a business, but you need to have a purpose beyond just making money for that company to become great investment, right? And the companies that engage in win-win-win scenario, win for a customer, win for their suppliers, and win for the company, and exhibit conscious leadership and culture. Habit number 5 is 5% max initial position, right? Don't go all in. Like I get so pissed off about these tweets when they come in. If you have $100,000, which one stock you'll go all in? I mean, no stock. I won't even bet $100,000 on just on myself. What if I come under bus, right? So never go all in. Have your initial max position as 5% so that you have at least 20 stocks to deal with. This goes against what Charlie Munger say, which would say diversify. He will say put eggs in maybe one basket and watch it really carefully. But I don't think we all can be at a level of where the Warren Buffett and Charlie Munger are. So maybe we should rather diversify our portfolio as an initial position. Don't make it more than 5%. That means you hold at least 20. I want to hold at least 30 to 40 tickers in my portfolio, right? 6, aim for 60% accuracy, right? So that means you have to be comfortable with losing, right? Don't try to make sure that every stock that you pick is a winner, because whenever we're trying to hit or trying to find these generational companies, it's a little bit of like I mentioned earlier, a little bit of a venture investing will be there, because these companies are changing the world, and hence their stocks will do good. They will also have a high chances of failure because they're trying to do something which no one else done. So even if you like 60% of your stocks have done better, are in profit, be happy with that. If you want to completely avoid all the losses, then just pick up T-bill, right? Stay in the treasury bills, but they're not gonna get those life-changing returns or life-changing gains. All right, now how do you identify these 6 traits of rule breaker stocks? Top dog and first mover in an important and emerging industry. I think all words are important. Top dog is the biggest player, and the first mover possible, and important and emerging industry. Right? So I unknowingly, when I didn't read this book then, but when I invested in Uber, I ran a snap test. If Uber disappears from the face of the earth, will we feel the gap? And my stuff was, yeah, I think we will miss it if Uber disappears tomorrow. So that was when I decided I'm going to buy some shares of Uber and then, study the company and all that stuff. So apply the snap test. But if you feel you invested in a company, if that disappears, no one cares. Many of the science projects are there. Then it may not want to be rule breaker. The stock may do well because right now everything is going up or there's a lot of enthusiasm, but it may not in the long term. You never know whether that company will survive or not. Okay. He also says, let's talk about cola test, in which it's not the biggest company, but probably if it is the only company doing it, that's even better. Right. Second is sustainable competitive advantage. We talked about it. Those 7 moats, 7 ways to have a moat around your business. They should have that competitive advantage. Otherwise, competition will come in and you'll never be able to have a top dog position. Third, this relates to the stock price, stellar past price appreciation, which is difficult to wrap your head around. Is, come on, I want to find the companies that have not yet grown. I want to find them before they become big. I want to find it before they start the run up, the price starts to run up. But contrary to that, it's like, hey, you should see a company which has already run up, have had stellar price appreciation. Because that will tell you that not just you, but other investors also feel that it's going to be a good company, and stellar price appreciation is actually a buy signal. Whereas for me also it's difficult because this is very contrary. Good management, smart backing. So current management plus the investor who backed it. Strong consumer appeal, again self-explanatory, is the products that they sell should have a strong consumer appeal. Coke, right, being consumed world over. Apple. Final, again difficult, overvalued. Right? Again, I'm guilty of overlooking this particular trade. I do sell some companies when I feel they're egregiously overvalued, because any good company, you cannot find it at a cheap price or at a reasonable price. It will always be overvalued. But I think you'll have to define at what level of overvaluation you are comfortable to hold it. I have decided what works for me. You have to decide what works for you. But if you want to invest in great companies, Amazon probably was never cheap, except maybe this year, or very few times that Amazon will be available at a reasonable valuation, right? Or companies like Alphabet. So be ready to pay more than, from a traditional metrics perspective, if you look at a PE, etc., be ready to overpay for these companies. Now, how much you want to overpay, I think it depends from individual to individual. So I have come to peace with overpaying for it, but then I put a cap on, okay, if it is going beyond this, I'm not gonna touch it, right? But one trade is that the CNBCs, Bloomberg, the Wall Street, they will say, oh, this company is overvalued, right? So these are the 6 traits of rule breaker companies. Now, 6 principles of managing a rule breaker portfolio is: make your portfolio reflect your best vision for our future. Portfolio should always reflect what you want to see in your future, right? I think otherwise I won't invest in those companies. Know and name its purpose. If you have a portfolio or if you have multiple ones, define, give it a name. Why I'm investing in this? What's the purpose of it? If the purpose is to go on a vacation next year, yeah, then you pick the companies that you're looking to make money for it next year. If a purpose is this is for to passing it on to heirs, that why do you care if Meta is down 20% this year? Right? Doesn't matter. Fair starting line. Give all your initial investments an equal and modest starting allocation, right? We'll talk about 5%. Make sure all of your allocations you equally distribute it among all the companies, because you never know which is going to become Alphabet or Amazon or Netflix, right? And you don't have to go everything all in. David Gardner recommends buying in thirds, right? If you want to invest $3,000, maybe invest $1,000 now, another 2 months later invest another $1,000, another 2 months later invest another $1,000. You can determine the amount and the time period. Because you never know, you invest in now, the stock could correct. Because these rule breaker stocks, they are also volatile. Establish your sleep number. Essentially, this is, I forgot which mattress came up with this sleep number, but determine what percent a stock can be of your portfolio and you won't lose sleep. What's your sleep number? I mean, each one of us, we should go and do that exercise of what's your sleep number. If you're holding an individual company, is it 10%, 15%, 30%, 50% of your portfolio? And make sure you stick to that number. And there is no one right number. Some people want to go all in. Good for them. I cannot. Right? And when I'm looking at a sleep number, there are two ways to look at this. One is the current value. If I'm looking at the current value of portfolio, it's 10% is invested in one stock. Or how much is my cost basis? How much of did money I invest in? Then it became more than that. That's different. I'm still trying to figure out what's the right sleep number I should use for it. But yeah, figure out what allows you to sleep well at night, because no investment is worth losing sleep. Find your own sleep number and don't care about what anyone else says. You get to invest for the whole race, unless Wall Street managers. We don't have a end date of when I need to invest in, right? I'm not tracking my performance only for 1 year or for next 3 years, or this fund is lifetime is 10 years, because after 10 years I need to have another fund. We can invest for a lifetime, and then only time I'm going to withdraw the money is, hey, if I have a better opportunity. Otherwise, why disturb the compounding? And final is review it quarterly. If it is too much quarterly, but review it periodically. You determine what's your right period to review these companies and then manage it. Whether you want to add more or whether you want to sell off some of that. And that he also gives a framework of 5 green flags versus 3 red flags, which is when you're investing in, write it down. Which are the 5 things I want to, see going. If those 5 things happen, I'm going to invest more in this. Or if these 3 bad things happen, I'm going to reduce my allocation. Again, none of these things have to do with the stock price. It's all that has to do with the business, right? So if the stock price corrects 50 or 25%, I'm going to reduce it, because you don't control the stock price. Or no control the stock price. I mean, in the long term, the stock price will follow the business. So look at the business and just say, let's say if you're investing in an e-commerce company, and you might want to say, if the number of monthly active users start to decline 3 quarters in a row, then that becomes a red flag for you. Or your gross booking values is going down. Figure out so you need to know in that business what are the KPIs of that business and determine 5 whatever, or maybe you can do 3 red or 3 green. Have some criteria. Otherwise, we'll all be running like a deer in the headlight, because the stock price is doing whatever it is doing based on what's happening in the market. Like it happened this week, right? A lot of stocks just got punished. No changes. The business doesn't change in a week. Or I would say maybe some of the stocks got overbid, just because the market was feeling enthusiastic about it. Right? So rather than trying to chase a stock price, which is I wouldn't recommend. That's not my style of investing. Try to focus on a business and see if the business is still doing good. Maybe then these drawdowns are opportunities. But if you don't understand the business behind it, then you'll always be looking for why the stock has corrected. What am I supposed to do when that has corrected? Or why the stock has run up so high? Maybe should I buy more? But if the business has run way higher than what the business suggests, then you're gonna have a different reaction to the stock price. So understand the business behind that. So question to you all: what's your sleep number? How big before you start to lose your sleep, How big you think one particular individual company? I'll exclude the ETFs out of it because ETFs have a multiple companies in it, but single company stock, how big you will let it become part of your portfolio before you start to lose your sleep? Shri is saying 10. I guess that is 10%. Anyone else wants to share? What's your sleep number? If you haven't yet decided, maybe do an exercise. It will help to identify your own sleep number. All right, so let's look at crypto market. Solana ETFs are now trading. I did not know earlier, but now then I found it. If you want to get exposure to Solana and don't want to open an account in crypto exchange, now you have a ETFs. I think XRP has also started trading, or it has been approved. I know there was a news around some XRP ETF from, I guess, Franklin or Fidelity. XRP ETF approval date. Now I'm just trying to look for if a countdown begins. Oh, Franklin, it wasn't Fidelity, it was Franklin. So it hasn't been approved yet, I guess. But Solana ETFs are already available. They're trading. There are a bunch of Solana tickers. If you want to get exposure to this without, getting into your cryptocurrency exchanges, there are now ETFs you can buy in your brokerage account. And I did buy one of them. I'll talk about it. Looking at overall asset market cap, $3.5 trillion. Bitcoin down 8%. When the proverbial stuff hits the fan, these are still considered as a risk on investments. So we'll see a lot of them have corrected this week. I think except Zcash, which is not in top 10 or 11. Otherwise, everything was red. But doesn't really matter. Bitcoin has been range bound between 100,000. It's actually dropped below 100,000. That became a big news on CNBC that it dropped below 100,000, but then it has recovered back. It's been between 100,000 to 125K for majority of this period. So some pundits do say that maybe 100K is a new support level for it. We'll see what happens to this. Whether 100K is a support level or not, only time will tell. I think some of the bulls, they're still maintaining their price target of 150K. I think someone is talking about 200K for the end of this year. I have no idea. This is a long-term play. I still consider it as a part of my risky bets. So position sizing is important over here. A quick look at the major corrections that have had happened in Bitcoin. Now the Bitcoin has become very, I would say, low volatile, but recent major correction happened was in 2022, the whole FTX drama, and it lost 78% from its all-time high. That was the recent one biggest drawdown. Prior to that, we had in 2018, 84%, and this was like way early, 2010 and 2011. When this was not even I wouldn't say that it's a mainstream yet, but it was only active in cypherpunks circles, I would say. The general public had never heard or never dealt. There was no news around Bitcoin during 2010s and 2011s, or I would say around 2015s. Once it started to show up on public media, I think we have seen bigger drawdowns of 78%, 55%, 84%. So this 2025, what we have a bigger one is around 32% from Jan to April. But then we have recovered and nothing much, like 10-15% drawdown. I mean, I would still expect, let's say 50% drawdown can happen. I don't think 80% will happen. Either we'll go to zero because if something exogenous shock comes to this Bitcoin probably will go to zero and won't stop at 80%. But outside of that exogenous shock, I think the normal volatility, yeah, 30%, 40%, even 50% could happen, and be ready for it. Don't be shocked, don't be surprised. This is very volatile. Asset class has become less volatile, but 40-50% should still be possible, I would say. Talking about the exogenous shock, I don't think this is exogenous, but something that's I noticed happening on the Bitcoin ecosystem is a discussion of a new fork. Anyone else keeping track on what this new fork was about? I just spent some time like yesterday late evening try to even read about what the heck are we talking about a fork again. We had one fork sort fork during the block size wars 2017. Now we're talking about maybe another sort fork. I'll give you a quick run down on this one. There's a new proposal that is to do a temporary sort fork. In this, basically, this will restrict adding content into the transaction. So way back in when the Taproot upgrade came, along with that, we also added more ability to add bigger data size into the Bitcoin transactions. Now, it said this is an open protocol, and if majority of the community say that it is okay to have it, and it was added. So we got stuff like ordinals, etc. Now using that ability, anyone can store some text, some image, dig metadata about the image, etc. Because now you can store bigger amount of data on the Bitcoin transactions. Now the concern, those who are pushing for this proposal is, what if someone stores illegal data? What if someone storing child pornography or stolen content, copyrighted material? And if you are a miner who's mining that block, are you legally become liable? So that's a concern. And now what this proposal does, and it's a temporary one while the community comes to consensus, is let's limit the amount of data that can be stored and limit it to only 83 bytes so that you can't store those big data blocks. Again, do not want to go through the details of these technicals of it, but the whole idea was that if someone is trying to add bigger size data, the consensus protocol should reject it. So as a miner, you should reject it. There are pros and cons. I mean, there are proponents of this, which I talked about why they are saying why we should use it. Because they say if you don't use it, then if I'm a small miner and I don't want to, get implicated by government because I'm mining some blocks which has got illegal content, I can't take that risk. But only the bigger companies can take that risk. That means we'll start to see some of the centralizations around the mining, etc. Right? There's operational and legal risk around it. You have illegal content on it. So these are the concerns. But the other ones, those who are opposing this, saying, hey, it's an open protocol. Now today you're putting at a restrictions at a consent at a protocol level. Tomorrow someone else could propose something else. So these are the discussions going on. We may end up, the worst situation that could happen in this case is around if we actually get a split. Like in Bitcoin has never had a split, but Ethereum did have a split. We have Ethereum Classic and now what we call as ETH. Because the fork, when the hack had happened way back in Ethereum ecosystem, one part of a community wanted to stay with the code is law. We're never going to change we're going to rewrite the blockchain. Other one wanted to, and then they split. That's the worst thing that would happen if that happens to Bitcoin, is if it's split. Otherwise, I think it's going to be a little more neutral to negative in the short term. There may be some concerns around decentralization risk, etc. But if we don't get a split, I think we will still live with it. If it doesn't pass, then it's a situation as of now, what the currently is. If it does pass, then will not be able to store larger content in Bitcoin. Maybe we'll figure out the layer 2 on which you can able to do it, but not on the base chain. But the worst thing would happen if it is split. That will cause disruption in overall the whole thesis behind Bitcoin as an asset class, which is what I'm worried about. But unfortunately, no one is talking about it because I think Tom Lees and the Dan Ives of the world only want to talk about prices going up. So if you want to get exposure to this asset class, read about it, stay up to date on what's happening here. I'm a little bit concerned on this soft fork proposal that have been put forward. If it doesn't pass, there's nothing burger. The worst thing is if it gets split, then who's gonna decide which is the main chain? And then if split could happen once, then the question will be why will not happen it again? And then the whole idea was around, hey, it's only limited quantity, all that stuff. So the whole thesis got broke. So I'm a little concerned about that. But we'll see where it goes. All right. Anyone else have had any concerns around this? We haven't talked about crypto for quite some weeks. But sorry to introduce it with the bad news, or not say the bad news, but I would say with little bit of concerning stuff. If you want to look at the bright side, there's a Fusaka upgrade on Ethereum, which is being planned for December. So if that goes through, it will be good for Ethereum ecosystem. A lot of enhancements being planned over there. Yeah. Beyond that, nothing much happening. After Genius Act, Stablecoin Act, the government is now shut down. So we're not gonna get the Clarity bill passed, right? Clarity Act. So that's not passing. So there's nothing much. It's the only thing happening is on the protocol side development. Those things are happening. Naresh, I'm in IBIT for option income. IBIT has been great for selling some premium. And I won't lie, I've been trading IBIT ever since options have been listed on IBIT. And if you look at IBIT, let's go 40 days out, right? At the money, short put is what? Let's $3.20. Let's take the mid price, which is what almost 6%. Right, 6%. If you're bullish on it, you can sell a put and have a 6% buffer. That's not too big. 6% is okay for 40 days. Oh yeah, oh sorry, 6% for 40 days. What am I talking about? So that means almost 6% for 40 days, make it, let's say 328, almost 50%. ETH spread is bad. I don't know, for whatever reason, ETH spread is bad. I try to look at other Ethereum ETFs, they are all equally bad. So none of the Ethereum ETFs are good, but I have to deal with what the market gives us. So I've been selling calls and basically options on ETHA and IBIT. FBTC, I rotated out of FBTC into IBIT because the options are tight on IBIT. I started when the ETFs came, I bought FBTC because they were the least expense ratio. The expense ratio was that I think they were the lowest ones. But then when the options started came in, IBIT is the most liquid when it comes to the options. So I sold my FBTC, rotated it to IBIT. So I'm on IBIT now. Or anything else on the crypto? Anyone else? Let's keep the meme crypto on the side. Let's talk about the main one. Anyone else have any other thoughts?
Have you been paying attention to privacy coins?
No, Zcash have had a great run. Mine's up like 100 times in last 4 months.
Yeah, I think that's That's the only one that's going to do well this year, end of the year. Like those, I mean, there's some other ones, but like, yeah, that's the only one. All the rest of them are doing terrible.
Yeah. But I have not followed in terms of what exactly is happening on the Zcash that has caused this. Can you comment on Bitforms if you have any insight? Bitform is that the miner. Now, are they becoming an AI play? Let me just look at. I've never invested in Bitforms. What's the ticker? Let me go. Bitform, BATFAR. BITF. Ooh. Me personally, if your idea around the Bitform is so again, the question is why would you want to invest? Is it to get an economic exposure to Bitcoin? If that's what you want to do it, now there are better ways to do it. This company has been diluting their shareholders like drunken sailors, right? And it's currently just running on an hype because the business is not profitable. That doesn't mean to say that the stock should go down. Stock can continue to go up because it's been in the short term it's driven by mood and the momentum, which no one has any idea of what the market mood would be. So I don't even want to hazard a guess. But as a business, bad business to be in. I mean, they can't even. They have a zero gross profits. So essentially, they are selling the stuff at less than what it cost of raw material or whatever the cost of goods sold, right? Let them become. Maybe they're investing a lot to become an AI play, like many of the other mining companies had done. They pivoted to the AI plays, but I would rather give it. Mining is generally very tough business to make money in. It's popular. Yeah, then let's play the popularity contest. Then I don't even have to look at anything else. And I have no idea from a popularity contest who's going to win. That's a completely different game. If you want to play the popularity contest, which then you have to look at the market mood and momentum, maybe look at those technicals, it will give you idea. I don't play that game. Look at, is this a business if I want to invest in for next 10 years? I don't think Bitform is at a place where I will like to put my money for next 10 years. So that's my quick thought on Bitform. All right. Looking at the traditional markets, we had a wobbly start in November because around the whole rich AI valuation, there was a concern around AI infrastructure overbuild. So I don't think the people or the investment community concerned over overbuild. They're concerned around how those deals are being funded. Right? If you're overbuilding it and if you can fund it out through your cash flows, who cares? Right? Of course, the individual companies probably will get impacted. But if you're also using a debt, which is now has caused a little bit of a concern on my head, is because until now they never raise a debts, etc. Right? So until now they were all focused on we're gonna fund through the cash flows, but now we are seeing them started using debt. Should give a pause, and I think that's what caused a concern in the market when we heard Meta raising debt, Alphabet, Oracle, etc. And then Meta came in and told you, if we can't use everything on our own, maybe we'll have it give this extra compute capacity to others. Right. So there was some concern, hey, are you building too much? Do we know if we ever be able to get an ROI on it? Now on top of it, you're adding a debt on your balance sheet, right? So earlier it was, yeah, you'll make money and through your cash flow you will sponsor. But now the situation, you better make money. Because if you don't, the creditors will come after you. So that is caused concern. And of course, when you look at an index level, we have a huge concentration. I mean, in the index, top 40 companies are like 40%. Sorry, top 10 companies are 40% of the index. These big hyperscalers, Max 7, are like 35% of the index. So any shakiness in this Max 7, you'll see the index becoming a lot more volatile. And it becomes volatile on both sides, on the upside as well as on the downside. So there is a short-term concerns on AI side, but otherwise, the overall business story, I think, is still intact on the market, on the mega tech. Right? We are still looking at, from an earnings perspective, mega tech has still grown 23%. Right? Yeah, which is still the best earnings growth. So yes, they've been overvalued. Yes, there are some concerns on the AI specific, but even looking for an estimated growth, these companies are still looking to grow, or the estimated growth is much higher than the rest of the S&P 500. Even the S&P 500 is on track for 12% earning growth. So the business wise, the market still looks okay. Right? So these adjustments are, maybe I want to take profit, maybe, oh my God, before this cracks down, I want to get out. We never know where some of those investors actually onboarded the train. If they onboarded the train at very recently, then you will see, oh my God, I'm losing money. I don't want to deal with it. Another interesting chart is Nvidia the Cisco, because this is the comparison that people generally talk about it. So on the left side, you see Cisco price and valuation. Valuation, like, or I would say pricing, PE. On the right side, you see Nvidia price and its valuation. It's not that richly valued as much as Cisco was valued. Cisco at some point of time, it was trading at a PE of more than 120 times. 120 PE. There are companies today, AI related companies, that trade at that richly valuation or even higher. But that's not Nvidia. That's why actually Nvidia stock price became cheaper after the stock became like 100% higher, because the business became much, much better business in 2024. 2023, it was more expensive than it in 2024. The stock was cheaper, not from a price perspective, but from when you compare it with the business. If you compare looking at a price, yeah, price continued to go higher, but the business grew much faster, and the projection was to grow even faster than at what the price had grown. So in 23, it was trading at 60 times. Your PE became much cheaper now. Right? So it's a lazy comparison, because you only compare the price and say, oh my gosh, Nvidia is the next Cisco. Probably not. It's similar comparison, what is market overvalued. We generally talk about, oh, PE of the market is 23, 24. On an average PE, 10-year average PE is, less, which is around 18. Market is overvalued. But putting it in a context, the right context would be also look at what the margins are. We have a different set of companies. You're comparing with the period when the profit margins were averaging 12%. Now they are closer to 14.5%. Then why would they not be overvalued than what they were around 12%? So that's the difference. The context matters a lot. Saying, oh, we are in .com like situation. I'm not saying that we are not, but saying .com like situation because we are seeing this overvaluation and the commitments. Hey, the companies are different. Maybe we will end up in that bubble. Maybe not yet. Or the companies that will melt up will be very different from the company that melted during the .com. Right? There are companies which have been bid up. Palantir, like Naresh mentioned, Palantir, maybe we would see them correcting, but may not be huge corrections, let's say on Alphabet and Amazon. Those are not that richly valued. So another chart from Rithol's past melt-ups. NASDAQ over last 10 years has been up 500%. During the 1990, the .com run-up, NASDAQ was up 800% before it melted down. So 500% is not that huge. That's a standard, like 90-20s, roaring 20s. Then this Japanese market. This is our own homegrown .com. and now we're sitting at 500%. You make your own judgment. Could it still continue to go high? Will it correct? If it corrects, which companies would be? That is more important than, I think, a blanket statement of, oh, we are seeing .com like bubbles. Maybe it will come. I'm waiting for correction to happen because that's healthy, but we don't know when it's going to happen. Looking at a fear and greed index, related to extreme fear, I think after a long time. Right. So someday when it is an extreme fear, generally I've seen that these are like better opportunity, better times to buy when everyone else is fearful. So I did add something to my portfolio. I like I mentioned, I added a new position on Solana ETF, picked up BSOL, added Meta again this week, added BYD again this week, and took an assignment on short put on XLP, which is a consumer staples. I don't have this consumer staples. I don't think I have any company on consumer staples sector, so I did want to get some exposure. I've been selling put on it, and now I got assigned. I was thinking, should I take an assignment or not? Then I looked at it. Oh, this is the sector that hasn't performed. Maybe whenever the rotation will happen, when the money will start to move out of these high growth AI stocks, maybe other sectors will perform. So I took this assignment. What did I sell? I sold iCash to purchase stocks. Right. This is my preferred vehicle to keep the cash on the side. Just put it in ICSH, and when I need, I'll just sell it and sponsor the stocks buys. But any stocks that you guys bought, sold this year? Oh, sorry, this week. I bought Meta. What else? ONDS. What's that? I don't think anyone brought up ONDS before. $16 million revenue. All right. These are again very running on some hype. And 16 million revenue, net income 50. Let me look at. Oh, God. Good luck. Things are like a VC type of investments. Make sure your position sizing is okay. Drone. Yeah, all these are new industry, right? Messi. This stock I've heard of. This Massimo. This is a biotech, right? Okay, Oximeter. All right. I have no opinion on Massimo. Never owned it. Have you looked at XIACY? Oh, Xiaomi, no. I mean, I've never traded on Xiaomi, but maybe a good, because they've been growing like crazy on China. I mean, now in the cars, of course, they are on headsets, now in the cars, but I've never owned this. I own few Chinese stocks, and beyond that, I've just now focused on just get a FXI or KWEP. So I have no opinion to offer on this one. I mean, not that would get said that's a stupid investment. Like unlike some of the other companies, which I see that turned out to stupid investments, but they've become much better over the last 2-3 years. Xiaomi, they brought down their share dilution. They are actually growing their operational income as well as the good free cash flow margin. Operating income has become better. Yeah, the company is becoming better. But I've not run the valuation to see, is it a $27? Is it a right price, or what is being priced into, how much growth is priced into this particular stock? Dave says bought Meta and Costco. Numbers look good. Technical is still bleeding. Pony, I think, is a Pony AI. Again, these AI plays. Other thing you need to worry about investing in Chinese company is the overhang of the communist government. These companies could, at any point of a time, could get taken over or be restricted by the government. So that is always there. Pony AI, again, VC investment. This is your ride-hailing software. I would rather have a ride-hailing software under a bigger company because we don't know which one will survive. Let's say if I were to take a bet on ride-hailing software, I'll take Alibaba because they're Apollo. No, Apollo is, I think, is Baidu's, or of one of these big ones, or if they tie up with these, because we don't know. There are many of these ride-hailing softwares, which one will eventually survive. But yeah, you want to do a angel/VC investing, possible. Right? That's where the company's stage is. She say I got us under XLK, which is a tech ETF, GNRC. That's a Generac. Generac. Never owned this. This stock always become popular when there are blizzards and the lights go out, and then it starts to correct. I don't know. Wow, in 2022. But after that, it's been trading sideways since 2023. But I've never. How's the option market on this one? Not too bad. I mean, it is wider, but not too bad. But I don't think I would want to own this company, so I'll stay away from it. Santa said, got BMNR short, put a sign. If you want to play the BMNR thing, you have to be really careful on, I mean, like I talked about it. These digital asset treasury companies were hyped up, the Dan Ives of the world and the Tom Lees of the world. I have no idea why I would invest in it. But if you want to go ahead, this is gonna stay volatile. All right, I'm slacking this month from a November. I still a lot of premium. I have 44 trades are still open with tons of premium. We'll see. I need to get my act together to close this. Just wanted to share. It's November 21st is only 2 weeks out, and I still have a lot of premium. But good thing is a lot of premium is in my hedging trades. So if the market corrects, the option trade should print well. If it not, I'll be happy to take loss on options and make money on the long side of the portfolio. Let's talk about some individual companies. XPeng, which is XPeng Motors, ticker XPEV, caught attention of investors because on the red day, this stock was up 12%. I think this was one of 4 or 5 stocks in my portfolio. Berkshire Hathaway was up, SCHD dividend ETF was green. I think energy ETF was green. And I'm like, why this Chinese company? Why this is up like 12%? What the heck this did? So any investors on this one? Otherwise, I'll skip it. If there's no one invested in this. Any investors in Xpeng? Okay, Ravi has it. Jose used to be. So they announced 3 things. Ravi, one is that the robotaxi. Another one was their robotics. They'll mass produce 1,000 humanoid robots in 2026. These robots have skins. They have a gender, and you can choose what kind of a hairstyle you want, what kind of clothing you want. I watched the video. So basically, a CEO had a Nvidia GTC like conference to unveil the, what company is planning to do in the near future. And they talked about the full self-driving system, which they claim is much better than Tesla, because on the same road, their system was engaged only once, the human intervention, where the Tesla, there has to be human had to intervene 7 times. Take it with a pinch of salt. Again, they are competitors. And then also they talked about mass production of their 2 VTOLs, vertical takeoff and landing, right? Flying cars. So there are 2 companies. I kept expanding my portfolio after I saw their 2023 or 2024 their demo in Dubai of their flying cars. I'm like, I think I should I'll hold some shares on this one if that becomes the next big thing. But now they came on the robotics. And so on the robotics side, I would want to yeah, I think they've done a better video. So if you get a time, look at the overall video of the CEOs, the GTC side. But this one, I will bring it forward to basically
and more vigorous development of the entire Chinese robot industry. If so, it will be worthwhile.
So this is unlike when Tesla had first introduced, we had a human under this cloth in this, and the human was walking across, and then Elon Musk says we will create a humanoid like robot, right? But if you look at this one, Ironwood, it blew my mind in terms of it looks so real, right? Doing catwalk like this.
Our team had intense arguments and discussions about how it can prove itself.
Right.
Let's first invite the staff.
So
we want to use scissors to open below the robot's legs. We will see that this robot has skin, muscles, and bones. Before us, we ourselves have not tried cutting its skin and muscles while the robot is powered on. They were worried that it might get damaged. Anyway, how about giving them a round of applause? The robot
will go
and
forward.
allow the robot to protect the surrounding environment. We have added a lot of muscle tissue filling outside the skeleton, as well as skin wrapping on the outside.
So feels like real, and you can choose. Okay, yeah. So
Thank Alan. Thank the staff. Please step off the stage. Thank you. Can it still walk?
This really blew my mind, because from a Tesla side, we are still talking about a humanoid robot, and these guys are way ahead of where Tesla is, right? And there is a link to the full video of that. If I think this is only the robots event, where then he talked about comes on different gender specific. You can, they're gonna add hairs and everything else. They got a skin and the muscles. It feels like very humane, right? So I'm like, okay, you know what? I'm gonna keep my shares. So they do have, and that's the reason why it went up like 12% on when everything else was red on the market. Oops, so let me just go to, yeah, this was a huge jump that we saw. Again, still could be very risky investment, because hey, there are a lot of other companies. Unitree is another company that makes humanoid robots. There are many companies in China, they make humanoid robots, but this is the first time where I've seen that they actually have with the muscles and the skins and all that stuff. Jose said it could be an amputee also. Okay. There was question on Tesla's Elon's pay package. The reason why I voted yes was because he's not getting a, as a freebie. This is divided into 12 tranches. And look, like, I'm not the only one. 75% of those who voted approved this pay package. So I have a majority. I have a 3/4 of the majority on my side, right? So, but if he delivers all these, right, they have a target on the market capitalization to reach $2 trillion. To unlock the entire package, Tesla should grow to $8.5 trillion. And where is Tesla's market cap right now? Anyone off the top of your head, where's Tesla's market?
It's a 1.5 trillion, something close to 1.5 trillion.
Right.
Has to go close to 8.5. So I mean, most highly unlikely he may hit it, but knowing him, you never know.
Yeah, and not only just the market cap, because market cap can be driven by mood and momentum, right? 2021 Tesla was up gazillion percent. What I liked about in this case is they got an operational and financial goal. You have to deliver 20 million vehicles. You have to produce 1 million robotaxis, selling 1 million Optimus robots. These operationals and the $4 billion adjusted EBITDA. Not just a market price, but this business metrics is what I liked about it. And best thing is not gonna get any cash salary under this plan. No cash salary. So if you do this, you'll get this, otherwise go home. Right? I would like some of the CEOs of the other companies to commit to such egregious plan. That if I blow it out of the, I only get paid, if I hit a home run. Otherwise, don't get paid anything. Right? Would you want to have that player in your team? But he'll charge you $10 million more than Otani. But say you only pay me if I hit home runs. That's a decision you have to make. And I think I'll be willing to pay and be okay if Musk get paid $1 trillion if the company is worth $8.5 trillion. That's what 12% of the market cap. I'll be okay with it. My shares will all, it will grow with me. Unlike GM's Mary Barra, where the shares have done nothing, but she has made millions of dollars. Come on, commit to this. Say, I'm not withdraw any cash salary. I will not take any other stocks unless the company becomes like 5x. But he adopted a similar pay package earlier and he delivered. Then give it to that guys. Right. So that's why I voted for him. That it is also has operational and financial goals, and he's committing saying, I'll not take a cash salary, but give me this. Right. So he's on my side. Most of the CEOs will sweat if you ask them to commit to similar, not trillion, but let's say just scale it down, but similar type of performance awards. Most CEO will not want to do this. Right. That's why. And then we saw, I think, during the same shareholder vote in the shareholder meeting, he also talked about maybe we will use Intel to develop the chips that Tesla needs, and Intel stock got a boost out of it. Right. So that was another news. Stuff around OpenAI. So question, should government bail out OpenAI? Oh, not bail out, but should government backstop OpenAI? Because OpenAI has committed $1.4 trillion to different companies. And so far the revenue was $20 billion, but I think Sam Altman said that they probably do $100 billion. And Sarah Fryer, the CFO, I think she tweeted or whatever, in maybe an interview, she said that government should backstop these commitments from OpenAI because AI is strategically important. So Shri is like a vociferous no. But I also have the same opinion. Government should not backstop OpenAI. If not OpenAI, we'll have someone else. There are many other companies. There is Gemini. It's not the only one. Boeing is the only company that is developing aircraft. So government helping Boeing, I understand, or helping Intel, I understand. That's the only company that is has a capability to manufacture chips. Otherwise, we are always dependent on foreign companies. But when it comes to these AI based models, there are other companies also. We got Anthropic, we got Google, we got worst come worst, we got a Llama from Meta. Right. So government should not backstop. And I think David Sachs said the same thing, that government will build out and not bail out these companies. We will provide government will help in building up the infrastructure for power, etc. But we don't want to bail out individual companies because there are many other companies which are in the same space. So Elena says waiting for OpenAI to go public. That will be some fun because I think it'll gonna go out public at what $1 trillion valuation. Because if they do $100 billion next year, and the 10x 10 times sales won't be that big a thing, right? So I think that's what he said in 2027, maybe $100 billion in the podcast with all was it I think it was all in podcast, yeah, or B2G podcast, where we had an interview of Sam Altman and Satya Nadella. He dropped the hint of around $100 billion revenue by 2027, and then if $1 trillion doesn't seem to be that far out, it's only 10 times sales,
Vivek,
not that bad.
Vivek,
Yeah.
I think the U.S. AI is really not very good compared to well, at least DeepSeek. I think DeepSeek, the answers are far better,
I don't know.
and we have liability here.
Yeah, so I think it depends from the use case to use case. So there are many models like the DeepSeek one or the Quen model from Alibaba. They are much cheaper for some use cases. So they are like will are 90% of the performance at 20% of the cost or 30% of the cost. From that perspective, yes, it makes sense for a lot of companies to go with Quen. I think I know one of the US companies is actually using Alibaba. I think Airbnb is using Quen from Alibaba. Companies to go with DeepSeek or I don't know what's the Baidu's model. Even Baidu has one.
What I'm saying is, the American AIs are just kind of suck. I mean,
So that I think the market will determine who the winners are. I don't think you and I can determine, but still, right now, uh, as I think compared to let's say Chat GPT, the latest version, etc., they are still better on one some of the individual use cases. But I wouldn't be surprised that if majority, a lot of other people want to move towards these others because they are much cheaper. So at the end of the day, you're gonna compare your performance versus cost, right? I I don't want to pay for Mercedes if I don't get those benefits of that. Right? So, and if my need is a utilitarian need for a transportation, then I don't want to pay anything. I'll just get a cheap, beater car and be happy with it. Comes at a 10% of the cost. So I think it's all dependent on what's the performance to your price ratio is. And there are many use cases where you're perfectly okay with 80% performance, or the same is the case with the chips as well. Why Nvidia chips are so expensive? I mean, you can get 80% of what Nvidia does, let's say, from some of these ASICs. So a lot of there are use cases in which we are using TPUs, we are using Trainiums, Infinium chips, and building your own ASICs. But then there are some use cases where you need to have those Nvidias. So that's what I'll say. All right, let's me. Well, yeah. So we should maybe spend some time on earnings and then we'll get into the breakout rooms. Let me answer some other questions. I saw some hand was up. I think they got their hand down. Jay is asking, which private companies would you like to buy share if you had a chance? OpenAI? None. I don't want to invest in. I mean, private. If you share all the books with me, then I can make a decision. The reason is everyone wants to invest in these private companies. It means there's already the stock has been bid up so high, and I have no way to even know what I'm paying for these. Right, and train will always come back. We will look at some stocks where the trains have come back. You guys probably remember Kava. How much was the craze on Kava? You guys ask me why don't I buy Kava? I don't want to pay $50 million market cap per store where Chipotle is selling at a $3 million per store market cap, right? 3 or 4, whatever the number was. And now the train on Kava has probably, if not come back, is soon coming back. So anytime a new tech comes, we always get overexcited and want to pay up. So now where's Kava? Right? Why would I pay? Now it's strain is almost back, guys. So Kava IPO'd near what, 40 or 40, wherever this is, like the first trade. Train is always almost back to the station. Now let's buy Kava if you really want to buy it. Why were you willing to pay $50 million for each store? Right? So I think the OpenAI will be bid up too high because there's so much of an interest in OpenAI that I want to stay away from it. I don't have a need right now to find this, I'm not desperate enough to buy, let's say, OpenAI. So I'll stay away from OpenAI. Anyone use Force Global or High to buy pre-IPO stock? I know some friends who have used it. Force Global keeps sending me emails, but I've not bought anything on Force Global yet. By the way, Force Global has been bought this week.
Schwab bought Force
Schwab bought Force Global.
Charles Schwab and Company just
Yes.
bought. Yeah.
Yes.
Yeah.
Schwab bought Force Global. So
Vivek, what do you think about stock like Rivian? Rivian has done so badly. Stock, you think they have a future?
So I have not looked at Rivian in some time, but last time we looked at where they got $5 billion of cash infusion from Volkswagen. So they continue to have, they will have to continuously raise funds till the time they can fund their operations through their own sales. So let's look at Rivian. Now the question is, will they be able to survive before that day arrives where they can live on their own? Like, as of now, doesn't seem to be the case. Oh, hold on.
But Rivian's been affected by the EV incentive, right? When it got taken away, the stock tanked again. That really hurt them a lot.
So, me personally, I would not invest in Rivian right now because right now they always need a ventilator to survive. I want at least them to breathe on their own before I put my money behind it. So it means once they run out of money, they'll need to either do another, let's say, secondary offering, dilute the shareholders, or they have to basically do another JV with some company. Volkswagen gave them $5 billion, or they'll have to raise a debt. None of these three situations are good for me as an investor. Right? So at this point of time, this is still a new startup investment phase, like call it Series B, Series C. Right? So go with that. But right now, they still have to. And the idea is, and if they can raise money and continue to invest and scale up to the point wherein they can start breathing on their own, yes, then it will become a good runway stock. Now the question is, do you want to bet on the future that they will be able to do it and invest in now, or do you want to get a little more certainty? So that's the choice that you have to make, right? And if you want to bet in on it now, and if your bet turns out to be right, you will be ahead in the game. You will make a lot more than, let's say, if I want to wait to get a little more certainty and bet it a little later. But that you have to make a decision based on what else you hold in your portfolio, how much amount you want to allocate to this, or how desperate you want to own this. I'm not desperate enough. Dave said if you hold forever, you could be the person who held Amazon 19 cents. Only if the company survives. Right? That's something which we don't know if Rivian will survive or not. Car making is not an easy business. It needs a lot of capital. And unfortunately, they are not generating enough from their own internal through the business, so they will have to keep tapping the capital market. So which is why I'll wait. I mean, me personally will wait. What else?
Hey, what about stocks like Visa and MasterCard? What do you think about that? Coinbase,
These are the
other
very
angles?
standard money printing stocks. It's like not much of a drama in it, but will continue to give you okay returns with good certainty. So call them like a grandfather kind of a stocks to own and hold it. But then don't expect, hey, I'm gonna make 50%. So you'll never be in the news. Right?
Boring is good. Boring
But
stocks.
Jose has said, right, so that their market share is under attack from crypto. Not yet, because Visa and MasterCard, they're also start to play in this market, but that will be the the thing to look out for is if the usage of stablecoin start to grow, that is one threat to their duopoly. I mean, they have been in this duopoly for decades now. But if stablecoin usage become commonplace, and if they don't have a play in that, then yes, they may be threatened. Outside of that, it's been a pretty standard business. So there are companies which like I think S&P Global is there. These rating companies, because there are hardly 2 or 3 rating companies, right? And every instrument that comes to trade on the market, every debt instrument needs to be rated. So they have a pretty good called monopoly or duopoly in that business. But then you won't not gonna get the 30% or few 100% returns like you get in some of the other companies. So you want to have some of these stocks for a stable part of a portfolio, sure, right? You can do that. Ford pulled out of Rivian. Both Ford and GM have pulled out of the EV play, and that's the reason why I've been selling my covered call on Ford ATM call I sold. Hopefully, if it'll get assigned by November 21st, I'll let it go, and then I think I still will have some Ford stocks. I'll let it go. GM, if it stays above 65, my shares will be called out, and I will happy to let go the GM. My reason I bought Ford and GM was maybe these are upcoming EV plays. Both of them have pulled out of their EV games, so I have no reason to own these companies. Okay, let's look at some earnings then. Or we jump on a breakout rooms. Any specific earning you want to look at? Let me first ask you that. I got Shopify, Coupang, what else? Airbnb, Arista Networks, Uber, Palantir. And how about there's another bunch of the, okay, oh. All right, okay, so I got AMD, it was, heading was wrong. So AMD and I think Robinhood, some of these stuff. I have Lyft. Okay. All right. So let's Axon. I don't have it. Axon got crushed after the earnings. So something that has been on my radar. TTD. I didn't do TTD yet. I didn't get a time to go through the TTD yet. All right. So let's start with the IC.
Hey, how about your favorite, Vivek? How about your favorite, Mercado Libre?
I already recovered last week.
Oh, you did. Okay. Sorry, I was not there. Thank you.
Yeah. That I already covered. Shopify, so beat on revenue, but miss on net income and miss on EPS, right? So EPS was down like 69%. What happened? You're up like 31% on revenue. You beat it. What did you do on EPS? So we'll look at it. EPS got impacted because that is equity investment. So I don't know whichever the equity. So unfortunately, I think it's happened in 2018 or 2019. SEC changed the rules saying if your company has invested in another company and it's based on how much percent, etc. If then let's say if those shares of that companies go down, you have to take a loss on your own profit and loss statement, even though it has nothing to do with your business. So nowadays it becomes really challenging when I see the earnings has gone up too much or have fallen too much down. Is it because of their business or is it because of the investments? So I would rather focus on what the operating income and operating margins are. That talks about the business that Shopify is in. Net income get impacted by you bought a shares of a company, that company shares tanked or market is in red. Right. So that's what happened. So ignore the net income and the EPS. If you ignore this equity investment, loss on the equity investment, the net income was like up 7% year over year. Good. Free cash flow margin at 18%, which is 9 consecutive quarters of double-digit free cash flow margin. Pretty good. They also got bigger companies as their customers. Business wise, all things look good. GMV up, subscription revenue up, MRR. Everything was fine. And the guidance was mid to high 20s. Gross profit low to mid 20%. Free cash flow margin will be even higher than Q3. So growing at a mid 20s with generating free cash flow at a margin of 18%. Is like the company. I think this is a good company. Business continue to perform. I think the stock got punished because everything else got punished, or maybe they're concerned around margin. So yeah, so I think, well, for whatever reason, the stock was actually okay, but then the overall market was punished, so the stock went down. But I'm pretty happy shareholder will continue to hold it. What else? Any coupon shareholders? Nope. I'll go to. Let me ask one by one. Arista Networks, Palantir. We should do Palantir. Come on, Palantir is a retail favorite. I'll skip all others if you want me to. Let's do
Arista.
Arista.
I have Arista and Airbnb.
All right, so let's talk about both. Airbnb revenue up nicely 9%, slightly concerns on the margin. I'll tell you why the margin is low. But what I like about this company is free cash flow, 32% free cash flow margin, which just blows away my mind. So this company generally have a kind of a negative working capital because they get money from customers before they have to pay out to the hosts. So that's why their free cash flow is so good, and they have a strong balance sheet. So $11 billion of cash and equivalents, and this does not include, I think they have another $7 billion of the payment that they received from customers have yet to give to the host. All the business metrics look good to me. Right. They also repurchase their shares. So growing not at 20%, but growing at, let's say, low teens, 10% revenue, decent gross profit margin, decent operating margin. What I like more about it is a good free cash flow, which they can then use to buy back the shares or invest back in the business, which they did. The margins were low, slightly low, if you can call 1.2% low. This quarter was they have spent money on scaling up some of the new features that they've introduced. So they've introduced services, and now they've also introduced a few more new features like reserve now, pay later. They've added more feature like if you're buying some experience, you will know who else is going, and then you can communicate with them, stuff like that. Guidance, 7 to 10% guidance. Again, not growing too fast. This is not a high growth company, but not bad overall. I would say it was a good execution. Don't expect this stock to, let's say, become double in a year or something like that, but it's a good, decent cash flowing business, and they are looking to introduce a billion-dollar business almost every year, or a part of a business or a new addition to an existing business which could then generate $1 billion. So CEO is focused on that one. The challenge that we see here is it gets impacted by a lot of macroeconomic factors, right? If the consumer is challenged, they don't travel much, will get impacted by this. Or if there is a war in some country, they get impacted by this. The biggest impact is the local municipalities or the local laws. They make it difficult for the host to do businesses, like New York. So to diversify, the companies also started moving into hotels. They own a hotel company. Now they also have hotels being shown in the part of your own experience. You don't want to book an individual house. Hey, I'm there only for a business travel. I just need a night. I need to crash for a night. Just give me a bed to sleep on. I don't really looking for authentic local experience. Yeah, you will book a hotel and be okay with it, right? So they've start to move into that area also. I'm still bullish on the stock. Hasn't done anything for 5 years, right? So train has come back. Okay, ever since they went IPO, I think the stock, they went IPO pretty close to this price. So yeah, so this is their IPO price, right? 120. So stock hasn't done much. But yeah, it was beat up at certain times. But I think I still like the business. I'll still hold it and reduce my cost basis by selling options against my holdings. So that's on Airbnb. For a change, market actually, after hours it was up 5%, but then it gave up all the gains when the market actually opened. Arista is double beat on Arista, beat on bottom line as well as on top line. New record quarterly revenue, strong balance sheet with more than $10 billion of cash. They announced AI agents, introduce an observability viewpoint for AI workloads. So basically, they have their product called Cloud Vision. So now they added Cloud Vision AI to manage your workloads across your network. And they also, along with other participants, they unveiled Ethernet for scale-up networks. This is an area where they're facing a lot of competition from Nvidia. Nvidia has their own Ethernet-based solution for putting together, connecting data centers, which is they call as a Spectrum X, right? But the other concern on Arista network would be the customer concentration. Few customers account for a lot of revenue. They have a Microsoft, Meta, they call it as a M&M. If you listen to the call, they'll say M&M, Microsoft and Meta are two big customers. I think they have 4 big hyperscalers on which they are working on 100,000 plus GPU, or maybe 500,000 plus GPU scale data centers. What I like about Arista Network not focusing on this quarter is overall, if you go back into the history of Arista Networks, ever since they came IPO, they've always been profitable. Always. Right? They never had a losing year. Look at overall in terms of the cash flow that they generate, the capex that they have to invest in. Even prior to AI, if I ignore last 2 or 3 years and just look at the results prior to that, it's been a business that has been run very efficiently. I wouldn't say it has been run at a very high growth rate, but it's been run very efficiently. So if you jump into his earning calls and listen to Jayashree, it's a music to my ears when you listen to that CEO. So that's all about Arista, that even without AI, they've been able to manage their business really well in terms of focus on the operational metrics, good operating margin, good free cash flow margin, and overall a great business to own. Market punished the stock after this earnings because they told they grow at their guidance was they're gonna grow at 18% or something, mid 20s, and market punished it. They're saying you're growing slowly, but I still like the company, and internationally still an untapped opportunity. Very recently, they brought on leadership to focus on international. So that's Arista. All right, let's look at the fundamental Palantir, retail investors' favorite. Everything is green on Palantir when I look at the business. Revenue up 63%. Come on, right? 63% at $1.2 billion. Everything on all metrics are good. Gross profit margin, operating income, adjusted EPS, free cash flow, cash equivalents. Even the business side also metrics. Commercial revenue is up 73%. This is where they start to diversify more into the commercial side. Government is still the biggest. I think it's still the bigger one piece of the pie, but they're growing their commercial much faster. Only thing I don't like about this company is the stock price. It's very, very expensive. Even after these, right now they're raising their guidance to almost 4 point $4 billion. I just don't like the stock price that which it trades. It's been bid up too high by the retail investors. I don't think much of it. Probably there are some hedge funds who are trying to get in and out, but there was no serious investors in this. It was a great buy at $7. I can't justify buying it at $170 or $180. So I had a covered calls on it, didn't get called away at 185. Then stock fell down. I thought it will get called away and I'll be happy to see the last batch of the stock getting called away. But no, it went, stock went down. I closed my 185 covered call, sold a few more. Ramesh is saying short sellers pulling Palantir down. I don't know how many short sellers are in it, except the Michael Burry tweet that made a lot of noise because and this is, there is a lot more in the media, there's a lot more noise than what actually the stuff is, because I think the media reports the 13F came from Michael Burry, and the media reports 60% of Michael Burry's portfolio is Palantir, is a short Palantir short position. That is completely untrue. I'll tell it again. That's completely untrue. Because if you own a short puts, the way it reports in 13F is a notional value. Nobody knows how much money did he pay to buy those puts and whether he owned the puts still or not. Nobody knows. Right? Apart from that, I don't know is there any other short seller on Palantir who is selling the share. Just that the stock is like superly overvalued. Let's agree to that. It was egregiously overvalued, and I won't be surprised if it continues to correct. Maybe I look at buying it maybe close to 110 or something. Even that would be higher. Or if the business becomes much better, then maybe I'll pick up some more. But I'm perfectly okay to get my shares called away. It's been a great run for me, stock. It's been a great stock, profitable stock for me, but I can't justify its price at which it is trading right now. It's pure gambling. And it's okay to gamble. Just don't gamble away with whole of your portfolio. That'll be the only, I would say, caution. Right now, it's just pure gambling. But they've done business-wise, I have nothing to complain. It's a great business. The stock has run up too far, right? Dave, is Fortinet dead due to customer moving up from 40-gate firewall to cloud-based firewall? I have not analyzed Fortinet as a, I think way back, maybe 2 or 3 or 4 years ago, I looked at Fortinet. It's one of those stable business, probably not much of a growth because all the growth is going to CrowdStrike. And some of these traditional firewall-based businesses, I don't know, maybe Fortinet is trying to diversify, or maybe just because I've never looked at the business. But then there are some of these businesses who are like, okay, I have hundreds of thousands of customers, I'm just servicing them, and raise the prices, inflation plus some number, and will continue to do what it does right now. So there may not be any factor left in Fortinet, but it probably continue to just generate a decent profit. Let's see, this is a mid 20s growth, 14% growth, decent operating margin, mid 20s to 30s profit margin, but not much of a growth on this. So that's why the market probably not rewarding the share, because the growth is growing to CrowdStrikes of the world at 50%, now 30%. It is after the fiasco of last year. Still they grew 30% year over year. First Solar. I stay away from these solar companies. I have no thoughts on First Solar because it's a very difficult business, right? There's a lot of Chinese. Number one, it is impacted by government regulations. So it doesn't control its own future, I guess. The government can subsidize it, not subsidize it. So yeah, I'm not in this one. I have no idea where the First Solar stock is. Wow, 267. Great run up. But you need to understand, I don't just don't understand this whole business. And the fact that it is so much impacted by the government regulations, and I don't want to be invested in this. Alrighty. Cool. What else? Anything new on the option side? Any new strategy you guys, anyone learnt? Anyone use box spread? Looks like it's time for me to use box spread again. I had closed my previous box spread. But I probably have to do another one. FSLR, I'm long. Don't say that. You are long, probably you understand the industry. I mean, it's too this is an area which I don't understand. So I will stay away. And number two is like, it runs on the government largest say, right? Either the tariffs on Chinese one or the subsidies for US companies. Come on, you don't control your own destiny. Right. So Jose said they usually do well towards the end of Trump admin. Like, see, you're dependent on the government. Right. So that's why I don't want to invest in these. But if you understand the space well and you can identify why this First Solar will do better than, let's say, others, there are other. If I were to invest in this industry, I will just pay, me personally, because I don't understand the industry, I'll pick up this damn ETF 10. And I don't know, has this done anything? Now our last 5 years is down 33%. Probably bad choice. But I don't understand this industry. AMD, I think AMD, yes. So AMD revenue up 36%. Wow. 20% up quarter on quarter. That's even better. CapEx, fine. Revenue guidance is again up 25% year over year. And the outlook doesn't include the China shipment, which just like Nvidia, none of them include China. Data center up 22% year over year. Client gaming up 73%. Record Ryzen 181% plus gaming. Numbers look all good. Record record quarterly revenue and free cash flow. And then they had a new partnerships with OpenAI, Oracle. OpenAI basically forming partnership with everyone that you can say about every company. Strong Q4 outlook marks a clear step up in a growth trajectory as our compute and AI business scale rapidly. So CEO is pretty bullish about it. Good free cash flow. The question that would be is, how much are you willing to pay for this? And what are they trading at? Not cheap, but not super expensive also. Right? Yeah, they're not trading cheap. They're not trading at cheap valuation, but they're not as expensive as, let's say, Palantir, etc. Right. But this quarter has been good. This quarter has been good. Shri says FSLR 5-year 267% versus 10 negative. 10 was like negative 33. FSLR is plus. I think FSLR should be plus because I remember about this talk. 2017, 18, some folks used to do options around it. Yeah, plus whatever, 200%. Okay, you need to understand the industry. Right? There was another few other companies in the same industry, Enphase Energy. I know they had a tough time. It's down like 75%. So unless you understand this industry, I think Enphase built those small inverters or something like that. I just don't understand this industry. Rohit says my average around 110. Is that for FSLR or is that for AMD? Rohit?
It's AMD. Yeah.
Yeah. So I've never owned AMD. I remember seeing AMD at $2.
Wow.
But I never owned AMD. I mean, that time I was pretty new to investing and all that. I only started focusing on like individual companies very recently because along with the job, it isn't possible to do in-depth study, etc. So I mostly used to stay with ETFs. It's very recently when I said this is what I want to do for my life, I started looking into individual companies. So I've never owned AMD, but I did pick up Nvidia, Palantir, Nvidia, Mercado Libres, some of these companies.
Yeah. No, I think, I mean, having someone, either one of them, Nvidia or something, or at least some company with an AI play, I think that helps. So at that point of time, I researched AMD and it made sense. The price was decent.
Yeah.
And luckily it worked out. So
yeah, I think it was available like recently 150 or something, not too far ago. Yeah, so 107. Yeah, 150, way back like mid of September.
Yeah.
It was 150. Yeah. But what I don't know is AMD getting business because Nvidia is too expensive? Right. What if Nvidia starts to say that it's okay for me to not make 50% margin? So this is the stuff for which you need to be careful about AMD is this is what I don't like. They're a low margin business. I mean, they don't manufacture their own chips. Then why, if it is only a design, why are those margins so low? Again, I don't own the company, but anytime I want to own it, I look at this and then I compare with, let's say, Nvidia, which is in similar space. Both are designers, right? Both are fabless companies. Look at the difference between AMD and this. That's what little concerning to me is why the margins are so bad. It's not that it's been only recently. Throughout its life cycle, like since 2018, or let's go further down. Yeah, I just don't like the margin profile of this company. So I've never been able to pull a plug because of that reason. And look at Nvidia, always had 17, 18, 20, 30, and in the more recent times, because like 60% operating margin.
yeah, I think the one of the reason is probably their data center business. I mean, they were not the data center business oriented. That was not a market leader. They are in the four verticals, different verticals, and but probably in the last year or year and a half, they started focusing more on the revenue that from data center vertical started going up. So that should be the reason why
Oh,
they have all.
but the margins have been pathetic even prior to that.
Yeah,
Like
mostly
it's a
single
bit
digit. Yeah.
single digits, etc. So that's what I'm like. I don't know. Maybe I don't understand AMD's business model. Maybe they have something, they are not purely fabless. Maybe they have something which has got a lot more capital intensive stuff, which is going around. I have no idea. I'm like, even TSM, which actually build fabs, have a better operating margin. I would rather own TSM. And the world cannot live without TSM. I think if the AMD goes under, I think world will still survive.
Yeah.
They may have a difficulty in surviving because they will have to pay to Nvidia through nose, but we will survive. TSMC goes under, will not be able to survive. Intel is nowhere closer to TSMC, and they have a like much bigger business, and they have a capex heavy business. So that's every time I look at AMD, I'm like, there's something missing. I don't understand, and then I didn't have to pull the plug. Kriti says that they are actually fabless. then what, they're not managing their business properly? I mean, as an AMD investor, you should ask these questions to yourself: is why the margins are so low? Maybe they are overpaying their employees, whatever the reason could be. I have no idea. All right, I'll open up the breakout rooms, guys. What else do you want to talk about? Or maybe we can do a different breakout room and then we can talk about different things.